What's good, YouTube? It's your boy JDC back with another video, man. Another daily upload. Today's upload is just going to be me showing you guys how I mark up the charts and basically just give you guys an overview of my top down analysis. So first thing I like to do when coming onto the chart is just marking up Asia session range, because on TradingView embedded in Top Step you can't have the indicator or whatever to already have it automatically marked up as I do on TradingView. So I just go to 18 o'clock, I mark out either the high or the low of it depending on how the rest of the session went, and I drag it to 0-0. And I put this at the high 0-0. So the low of Asia session was down here, so I dragged it down, and now we got Asia session low, Asia session high. The rest of this is London. From there, what I like to do is mark our previous day highs and lows. So as you can see, the previous day low would be right here, which got ran during Asia session, and then we'll mark out the previous day highs, which could possibly be a target, which would be high of this day. Let's just drag it out further for the full day. All right. So after I do that, I pretty much just go up to the daily time frame. I like to see what day that was. That was the 23rd. The previous day was bearish, so I ideally would have been looking for shorts, or I would have, if I was unsure, if I couldn't find any short setups, which there is one possibly right here. I wanted to go bearish short term. If we pull a fib from the high to the low just to try to get a bearish entry, we could see that this level is a 62% level. Possibly could have caught shorts here going down. This is, I think, something I actually did look for. I don't know if it would have, let's see if it would have played out. If we would have got our 1-2. We clearly would have got out here with a 1-2 ideally. It wasn't the best time to be looking for shorts, especially given that previously 10 o'clock and 9 o'clock showed us it was bullish. I most likely would have been looking for longs. We could very clearly see an imbalance here on the 1 hour time frame. Price ran it at 10 o'clock, which is what I like to do. You'll see me do this upcoming week, wait until 10 o'clock to enter my trades. And we could have got long here. And we honestly could have held for the rest of the week, which it was only Thursday, so we only had one extra day. But this trade would have went to almost a 1-5. If you would have waited till 2 o'clock in the afternoon, you would have had the 1-5. But I like to take my 1-2s. We would have got out within the same hour we took the trade. So quick 1-2 on the imbalance play at 10 o'clock. I'm gonna start anticipating them 10 o'clock moves. I'm aware that we did come up here, tap into this gap, and if we do pull a fib from this low to the more recent high, actually, let's see. Actually, no, we don't have any grounds for that. So shorts wouldn't have made sense. We would have seen that 9 o'clock opened up bullish. We would have played the imbalance play at 10 o'clock. It would have came back, tapped us in, and we would have quick 1-2. Same thing going on for this day. I'm just gonna, that's 18 o'clock to 0-0. We go to the high of 0-0's candle and the low of whatever is the more Asian session. Dang. If we look, I gotta start marking my previous day highs. If we drag this previous day high over, we can see that it actually did sweep those. Swept the previous day low, a previous week low. And if we go to our daily time frame, look at that day, which Friday. Previous day was bullish, so we would have been ideally bullish. Go back down to, let's mark off this imbalance that just was left behind on Friday. Did get retested. Here, maybe, possibly could have got ran, but we can't guarantee that because we're looking hindsight. Let's go back to the 1 hour, see if we can find a different setup for a long, because we would have been ideally bullish. We take it from this day's low, or Asia's or London low, the 9 o'clock open candle. We're gonna go from previous day's low to that high. Let's see what we get. 9 o'clock high. What are we gonna run it back? Even I get confused sometimes, I ain't gonna lie. Previous day high would have been right here because it's so bearish. So that's what it was. Previous day high on the 23rd, Friday was the 24th. As you can clearly see, 8 o'clock tapped into the previous day high, went bullish from there. If we go from previous day's high to that more recent high before 9 o'clock, you can see at 9 o'clock tapped into the 62% level. I probably wouldn't have been looking at the charts then. So if we go to the 9 o'clock high, we then could see that right here, price didn't tap into the level. It kind of pushed through it, but before doing so, went up a little bit, came back, tapped into the 62% level, fell a little bit lower, and then went up from there. And left behind some gaps to play off of possibly in the future. Draw a fib from this to this level, taking advantage of this 62%. Oops, I keep doing that. This to this level, taking advantage of the 62% level retracement that happened right here, which would have actually been a picture perfect move because we would have gotten right here. Price would have never ever came down to touch our 50-point stop. That's pretty much how I look at the charts. I'm tired, but that was a picture perfect move. Appreciate y'all boys for rocking me. If you're new here, hit the sub button, hit the like button. I'll see y'all boys in the next video.